Okay, so let's continue with question one. We are still solving questions on IAS 8, accounting policies, changes in accounting estimates and errors. Let's continue with question one. Let's continue with question one. So it says in 2023, CN Limited changed its accounting policy relating to valuation of inventories. Before 2023, the inventories were valued under the weighted average cost method. In 2023, the method was changed to first in, first out. So they changed it to the FIFO method because it was considered to more accurately reflect the usage and flow of inventories in the economic cycle. The impact on the inventory valuation was determined to be, so the 31st December 2021, an increase of 10,000, 31st December 2022, an increase of 15,000, 31st December 2023, an increase of 20,000. The income statement prior to the adjustments are as follows. We have them here. So revenue, cost of sales, gross profit, admin cost, selling and distribution cost. So we have them for 2022 and 2023. Retained earnings at 1st January 2022, okay, is 540,000. So we have the opening retained earnings for 2022. Share capital is 500,000 and revaluation reserve is 399,000. Corporate tax is 25%. And the requirement is we have to redraft the profit or loss account for the relevant years. Then we have to prepare statement of financial position for the relevant years. So this is also a change in accounting policy because there has been a change in measurement, right? There has been a change in measurement. They were doing FIFO method. Sorry, they were doing weighted average and they changed to the first in, first out. So there has been a change in measurement. So this is a change in accounting policy. Okay. So question one here, let's start with 2022 and do the adjustment to 2022. Okay. So I said we can use both methods. You can both adjust, you can first adjust your cost of sales and then go and fix or plug in that into your P&L account, or you can pick the net profit before the adjustment and you revise the net profit, right? So let's start with the cost of sales method. Okay. So let's start with the cost of sales. So with the cost of sales, what's the cost of sales per question? So per the question, our cost of sales was for 2022. Okay, here it was 80,000. So per question, we have 80,000. Then in 2022, we're told to increase. So before I continue, this is similar to what we did in the previous video, right? It's the same thing, very, very similar. The only thing is that here there's a corporate income tax. Tax has been added. That's all. So they said 2022, we have to increase closing inventory by 15,000. And 2021, we have to increase closing inventory by 10,000. So if we increase closing inventory in 2021, that will be the opening for 2022. So in 2022, it says we should increase opening inventory by 10,000. And when you increase opening inventory by 10,000, right, what happened? Cost of sales increases. Okay, so we just have to add that up. I said again in the previous video that this is not error, that you have to determine the impact and revise or correct. This is just a change in policy. You are just trying to let the changes reflect in the books. Okay, so if it says increase opening inventory by 10,000, you know when you increase opening inventory by 10,000, it will increase cost of sales. So just add it to cost of sales. That's all. It is not error. Once again, be very careful. It is not error. So I don't make any mistake of correcting it. This is just a change in policy. So the opening, okay, for 2022, how much is the opening? It's 10,000. We have to add it because we expect that to increase our cost of sales. Okay, so you add it to cost of sales, and then it says when you go to the end of 2022, the closing, it says we should increase closing by 15,000. when you increase closing inventory, what are you doing? If you increase closing inventory, you are reducing cost of sales. An increase in closing inventory will reduce cost of sales. So we just less it from cost of sales. That's all. We less the 50,000, and what we have is our answer. Okay, so 80 plus 10 minus 15 will give us adjusted cost of sales. Our adjusted cost of sales of 75,000. Okay, then now that we are done adjusting the cost of sales, plug in the figures. So we have our revenue for 2022 as 200,000. Then we are going to less cost of sales, and the cost of sales, this one is the you're going to use a revised one with 75,000, and that will give us gross profit of gross profit of 125,000. So these are gross profit 125,000. Okay, then we bring in admin expenses. Admin expenses. How much is the admin expenses? 50,000 for 2022. So admin 50,000, and then we bring selling. Selling is 25,000. Okay, so wait, selling is 15,000. Sorry, selling is 15,000 for 2022, right? So it's here we have 50,000 as admin, and then 15,000 as what selling, right? Okay, so we just do it, and then we have a revised profit. We have our revised profit. Okay, so this is the adjusted. When we do it, we'll get the adjusted profit. So we have the adjusted profit as what do we get? We are going to get 60,000. Adjusted profit is 60,000, right? So adjusted profit, he said, will give us 60,000. I'm sure I'm getting the same thing or the right thing. Okay, so we have 125,000 minus 50,000 minus 15,000, right? So 60,000 as our adjusted profit, and this is what we are going to use in our stuff when we are computing the or when we are revising the retained earnings. So we've adjusted our profit now by 5,000. So our adjusted profit is now 60,000, right? Okay, then if you want to do stuff, then we can apply our tax. Okay, let's get our tax. Tax, with the question said tax is at a rate of 25%. Here, corporate tax is at 25%. So when you come here, tax is at 25%. So that'll be 25% of the 60. Okay, and 25% of 60 will give us 15,000. So 15,000 is the tax, and then when we less the tax, we'll be having our profit after tax. Okay, at 45,000. So 45,000 is the profit after tax. As simple as that. Now, if you want to use method 2, we are still doing 2017. We said if you want to go by method 2, okay, if you want to do method 2, then what you have to do is very simple. Just pick your profit, okay, bring your profit, which is 55,000. This profit here, this one, bring your 55,000 here. Then we said if we increase opening inventory, we said if we increase opening inventory, okay, what will be the impact on profit? When opening inventory increases, cost of sales increases, and that reduce what? Profit. So we have to less. And I said again, this is not error. So please, we are just doing the impact. How would they impact the statement and you do it? So we are going to less the opening of 10,000. So we less the 10,000 opening, and then the closing we add. Just determine the impact yourself. So we add the closing 15,000. Okay. Then when we add, what do we get? So 55,000 plus 10,000. Sorry, 55,000 minus 10,000 plus 15,000. So this should give us 60,000 as the revised profit, 60,000. So we got the same thing up here. We got the same 60,000 as our adjusted profit. Okay. Then we apply the tax on it. Now, don't forget that this 55,000 here from this extract here, tax has not been applied yet. Okay. Tax has not been applied yet. That's why we did the adjustment before applying the tax. So our tax will be 25%. So the tax is 25%. Okay. So 25% of 60, which will give us the same 15,000. So we have to less the tax, which is 15,000, and that will give us 45,000. So these are profits after tax, which is 45,000. Okay, so this is a profit after tax, and you can do it this way too. When you can pick the opening here. Okay, the profit 55,000. Apply the tax on it. Then this we are lessing opening. Okay, we are lessing 10,000. So the tax element should be added. Then closing 15,000. We are adding, so we less the tax element. Okay, so you can equally do it this way. You can do it this way. So I want to really understand. So you can bring the profit like this. So you can bring your profit here. What the profit is 55,000, right? So you bring a 55,000 profit, then the tax on it, you less the tax. Okay, the tax on that 55,000, because it like they're yet to charge tax on it. Are you following? If they had charged tax already, then you wouldn't have done anything. But like tax has not been yet factored in, so you have to charge tax on it. So 0.25 by 55,000. Okay, so I got tax of, so let me say 25%. So I got tax of one to be 13,000 750. I punched that right now. Now then we said we are lessening the opening inventory. We are lessening the opening inventory. How much is it? 10,000. Okay. So we are lessing the opening inventory 10,000. And then we said when we less it, the tax should be added. So what the tax on the 10,000? We've done this already. The tax on the 10,000. I'm following. So 25% of the 10,000, which is 2,500. So we have to add the 2,000 what 500 because we are lessing the item. Like I told you, if you are correcting something by lessing, the tax should be added. Then the closing was added. We added 10,000. Sorry, we added 15,000 as closing, 15,000 like this. So if we added 15,000, then the tax should be less. Okay. We looked at all this in the previous video. So if you've not checked. So the tax element, which is 0.25 by the 15,000, which is 3,750, 3,750. This figure should be less. Okay. So you can do it this way too. Either you do the tax impact on the individual staff. So if you do that way, then you are going to start with the 55,000 minus 3,000 minus 13,750 minus the 10,000. Okay, then plus the 2,500. Then plus the 15,000. Then minus the 3,750. Okay, and that will give you the same 45,000 profits after tax. It'll give you the same thing, right? So you can do it this way too if you want. I want you to really understand what you are doing. So this will be your profit after tax. You get the same 45,000, right? Okay. So you can do it this way. Just know that this profit here, 55,000 here, has not been taxed in the question. So you have to find the tax element and deduct. Then you less the opening inventory. We add back the tax element. Then we add the closing inventory and we less the tax element. We said it's the other way around, right? If you are doing adjustment by lessing the difference or by lessing the item, they have to add the tax element and the vice versa. So this is for 2017. Okay, sorry, this for 2022. This for 2022. We did both methods. Let's go and look at 2023. So with 2023, we are going to have, we can do the same thing. We can do method one, cost of sales. Okay, so let's do our method one. So we bring our cost of sales. We are using the cost of sales method. So the cost of sales per question. So in a question we have cost of sales of 100,000. Okay, it's in a question for 2023, 100,000. Then we said we are going to add the opening. So we add the opening, and in 2023, the closing of 2022 becomes the opening for 2023. So 15,000, and then we less the closing. The closing is 20,000. Then what do we get? We are going to get adjusted cost of sales. We have the adjusted cost of sales as 95,000. So this is our adjusted cost of sales to be 95,000, right? And this is what we are going to use. So when we go to our P&L account or the adjusted P&L account, we are just going to record that one. So let's go and do the P&L account now. Now that we are done adjusting the cost of sales. So our revenue for 2023 is 250,000. Then the adjusted with less cost of sales. And cost of we are going to the adjusted one. So our cost of sales, adjusted cost of sales is 95,000. And then what do we get after deducting the 95,000 from 250,000? This gives us 155,000. So we have our gross profit as 155,000. Then we have admin. So we'll bring the admin and then the selling. So admin is 60,000 for 2023. So admin 60,000 and then selling is 25,000. So we less 25,000 and then we get 70,000 as our adjusted profit or profit before staff. So we have 70,000. Okay, 155 minus 60 minus 25, 70,000. Then the tax is 25%. So 25% of 70 is 17,500. So less the tax. And then we have profit after tax. So we have our profit after tax, 70,000 minus 17,500, 52,500. So this is our profit after tax. If you want to use method 2, okay, let's do method 2 and then we'll revise our retained earnings. So if you want to use method 2, so with method 2, you bring your net profit. And what's our net profit? Our net profit is for 2023. Our net profit is 65,000. So this one here, okay, you want to pick this 55,000 and do the adjustment to it. So 55,000, and then our opening inventory that we have to increase by 15,000. So we less opening, and you know why we are lessing? We said that when opening inventory is increased, or if we increase opening inventory, we are increasing cost of sales. And when we increase cost of sales, profit will reduce. So we less from profit. And then we have to add the closing. We have to add the closing. Now what's the closing? 20,000. And we are adding the closing because if we increase closing inventory, cost of sales reduces and profit increases. So we have to come and add. So when you are done adding all these things here, you will get 70,000. So you get 70,000 as the adjusted adjusted profit before tax. Okay, so this gives us 70,000. Then our tax, what's the tax rate? The tax is 25%. So 25% of 70 gives us 17,500, and we less the tax. So when we less it, we are going to have profit after tax of 52,500. So profit after tax of the same 52,500. 52,500. So 52,500 is the profit after tax. Okay. If you want to look at the other method too, we said it's fine. This is what you do. This 65,000 profit is before tax. Okay. This 62,000 and 65,000 is before tax. If you want to do it individually, then this is how it will be. You bring your net profit. Okay. You bring your net profit of um you bring your net profit here, and the net profit is 65,000. And we said this one tax has not been charged. Be very careful. If tax has been charged, we'd have charged tax already. So tax has not been charged. So you bring your tax, which is 25% of the 65,000. Okay. Okay. And that will give you 16 what? 500. 16,250. So 16,250 is the tax on only this profit, because this profit is before what tax? Are you following? It's in the question. They've not charged tax on the profit. You could see that if you come here, this 65,000 here, there's no tax that's been deducted. Then we said we less the opening, and the opening 15,000. We are less in the opening 15,000. So if you are less in the opening 15,000, then the tax on it should be added. Because that's what we said. So the tax on it, the tax on the 15,000 should be added. So 0.25 by the 15,000, 3,000, which is 3,000 what? 750. We have to add it. Then the closing, we are adding the closing. So we added the closing of 20,000. Okay. And then the tax should be less. So the tax on the 20,000, which is 0.25 by 20,000. I got 5,000. So the 5,000 should be less because we added the, so the 5,000 should be less. Okay. So in all we have 65,000 minus 16,500 minus 15,000 plus 3,750 plus 20,000 minus 5,000. So it will give us the same answer. Okay, 52,500, right? So this will give us the same 52,500. That's the profit after tax, 52,500, right? Okay, so we have 52,500. Then let's go and adjust our retained earnings. So retained earnings, let's adjust the retained earnings. So with our retained earnings, we are going to have 2022. So we are going to have 2022. So let's adjust our retained earnings. We have 2022 and 2023. So with 2022, we have the opening. What's the opening for 2022? Now you come to the question is what? 540,000 here. Opening for 2022 is 540. So you have your 540,000. Then there's a correction that we have to do here. Okay, correction. And the correction is from 2021, right? 2021, it says we should increase opening inventory by 10, 2021, it says we should increase closing inventory by 10,000. 2022, 2021, it says we should increase opening inventory by 10,000. 2021, it says we should increase closing inventory by 10,000. 2022, 2021, it says we should increase opening inventory by 10,000. 2021, it says we should increase closing inventory by 10,000. 2022, 2021, it says we should increase opening inventory by 10,000. 2021, it says we should increase closing inventory by 10,000. 2022, 2021, it says we should increase opening inventory by 10,000. 2021, it says we should increase closing inventory by 10,000. 2022, 2021, it says we should increase opening inventory by 10,000. 2021, it says we should increase closing inventory by 10,000. 2022, 2021, it says we should increase opening inventory by 10,000. 2021, it says we should increase closing inventory by 10,000. when we increase opening inventory by 10,000, sorry, 2021, we asked to increase closing inventory by 10,000. In 2021, when we increase closing inventory by 10,000, cost of sales will reduce. And when cost of sales reduces, profit increases, right? So it means that in 2021, we have to increase profit by what? 10,000, right? And that profit is in the opening retainings for 2022. So you have to go back and add the 10,000 to the retained earnings because profit for 2021 is in the 2022 retained earnings. And then we will less the tax impact. We said whenever we add the error or whenever we add the adjustment, we less the tax. Okay. So the tax 25% of the 10,000, which is the 2,500, 2,500, we will less it. Okay. So we have to even adjust the opening balance for 2022 before we move on. We have to adjust it. Okay. Because that retaining for 2022, for that figure, adjustment has not been done, so we have to do it. So we will less the tax. Okay, then we are done with the adjustment. Then we'll now come and add profit for 2020 what 2. And profit for 2022 is the revised figure, which is the 45,000. The 45,000 adjustment that we did, okay, for 2020 two are adjusted here. This one 45,000 adjusted profit after tax. So we bring that. Okay, so we have 540,000 plus 10,000, then we less 2,500 plus 45,000, and this give us the closing retained earnings. Okay, so we are going to have closing retained earnings of 592,500, right? So we have 592,500. Then the closing of 2022 becomes the closing of 2022 becomes the opening of 2023. So we have 592,500. Then for 2023, the retained earnings, there's no error. So we just bring the profit, which is 52,500. Okay, 52,500. And then that will be our closing retained earnings of 645,000. So this is the closing retained earnings. We are done with the retained earnings adjustment. Let's redraft the changes in equity. Okay, so let's check the changes in equity. So statement of changes in what? Equity. Now let's start. So with the equity, we have columns. Right? So we have share capital. So I'll use this one as the share capital. Then I have my retained earnings. Then I have the revaluation reserve and what? The total. Right? Now we have the share capital, the revaluation reserve, the retained earnings, and the total. So if you start, let's start with the year 2022. So 2022 opening, okay. So you can write in the years opening share capital is 500,000. So we have the 500,000. Okay. Now the retained earnings for 2022, okay, will be the figure brought down. How much did we bring down? I think we brought down around here, this retained earnings, 540,000. But we did adjustment to it. We did some adjustments to it. So the opening will be your here, 540,000, okay, plus the 10,000 error, then minus the tax, okay. So we have to add the 540 plus 10 minus 2,500, and that will give us the opening figure. Okay, that will give us 5 4 7 500. So this is the opening. Revaluation reserve in the question is 399. Those ones are not affected. 399000. Good. It's in the question. That's the revaluation reserve. And then the total is 144. The total for everything, okay, becomes 144,6,500. Okay, so this is the total, okay, of the statement of changes in equity. Then we bring the opening, then profit for the year. So this for 2022. So profit for the year, okay, profit for the year, we'll add it to the retained earnings, and that's the 45,000 for 2022. Is that when you add it, you come and get the total here. You come and get this 592,500. Evaluation reserve, there's nothing. Okay. So you just sum it up and you get your totals. So you just sum all and you get your total, right? Okay. Then when you go to the next year, that's 2023. So let me underline all these ones here. Then we can have the closing balances here. So when you go to 2023, let me just answer 2023. Okay, so this will be the closing figures, which will be 2020 what? 3. So here you can put, let's say 2020 what? 2. You can put 2022 here. Then know these are the retainings for 2022. Then when it comes to 2023, okay, 2023, the opening, the closing for 2022 becomes the opening, right? So here will be 500,000. Then profit for 2023, we have to add, okay, profit for 2023. But before that, the closing, when you add this 547,500 to 45,000, what do you get? You get 592,500. Okay. This one will not change. We still 399,000. And then the total will be. So I'm just adding. So you let me see closing before 2023 so that you get it. I'm hoping you are following. I'm just doing the change in equity. Changes in equity. I'm not doing anything. Okay. You know how we do statement of changes in equity. The only thing I'll be affected there is the profit. So this will be the closing figures. Let me write the closing figures before I go to 2023. So these are the closing figures. And here will be 1 4 1 4 9 1. So 1491 500. Then I will now go to 2023. So when you go to 2023, the opening is the same. The opening, the closing for 2022 becomes the opening. So it's the same 10. Okay, the closing of 2022 becomes the opening. Then here to the same thing, 5, the opening will be 592,500. And then the closing, stated revaluation reserve is the same, 399,000. And then the closing total is still the same, 1,491,500. Then profit for the year, when come here, profit will not affect anything here. It will come to retain earnings. And that one is 52 for 2023 is 52,500 is our profit. Okay. Then you come and add it to the total. So here we can add the profit to the total here. It's 45,000. Should be added to this one, the total 45,000 here. So just do it the way you understand it. I'm just doing changes in equity. That's all. So when you add this one here, you can come and add it here, which is 52,500. Then we just get the closing. So the closing figures. So with the closing figures, here is 500,000. Here we'll get 645,000. And then here the same 399,000. And the total here is 1,544,000. So you realize that let me underline this one. So we know these are the closing figures. Okay. So we just cross check if there's any error with the or there's any mistake with the figures, you just do it. Just understand that what I'm doing is a normal changes in what equity. So I can even draw a line here to separate these ones here, and then here too, and then this one and this one. So that's it. So that's it. You just bring the opening balances. Okay. Then you add profit for the year. That's all. And then for 2022, we adjusted this figure here. Okay. We did the adjustment up there to get the figure. You add profit for the year. Then you get this one here. This is the same. And here's 144,600. Then when you come to the closing, you add this to this, you get this. You have the then when you come to the 3, share capital doesn't change. Retain earnings, you bring the opening, then you add the 52,500 for profit for the year. Okay, revaluation reserve doesn't change. Then the retain earnings, the closing becomes 645,500. I'm sure, hope I'm right, which is the same thing as we got here in the retain earnings. Okay, so that's it with this question, right?